Welcome to Wealthmaster, your go-to channel for the latest insights on global finance, economics, and wealth-building strategies. Today we're diving into a question that's on everyone's mind. Are we headed into a worldwide recession? Let's take a close look at the current state of the global economy so we can better understand where things are headed and, more importantly, how you can prepare. Now, it's hard to ignore the growing concern in financial markets. Experts are signaling that a major recession could be looming on the horizon. But what's really happening beneath the surface? Is the global economy truly in freefall, or are we just riding out a storm? To get a clearer picture, let's break it down region by region, starting with Europe, where the storm clouds have already gathered. Europe is facing a particularly challenging situation. The continent is dealing with stagflation, a nasty mix of low economic growth and rising inflation. Countries like Germany, Austria, the Czech Republic, Hungary, and the UK are all feeling the pinch. Inflation is up and growth? Not so much. In fact, Germany, Europe's largest economy, is a prime example. They've been hit hard by rising energy costs, losing access to cheap natural gas from Russia, and shutting down their last nuclear power plant in 2023. These moves have left industries like Volkswagen facing skyrocketing costs. The result? Volkswagen, an automotive giant, may be forced to close some of its plants for the first time in its history. For Europe, this means inflation is continuing to rise, while economic growth is either stagnant or shrinking, depending on the country. And here's the dilemma. Should central banks focus on stimulating growth, or should they keep fighting inflation? So far, we've seen interest rate cuts in Germany, the Czech Republic, and the UK, with more likely to come across Europe soon. All signs point to a major downturn ahead, especially if energy costs don't stabilize. Now, let's shift our focus southward to a different story, one of resilience. The global south, including countries like Brazil, Russia, India, China, and Saudi Arabia, paints a more optimistic picture. Here, we see expanding economic growth, except for two major exceptions, Russia and China. Russia, still grappling with the economic strain from its war in Ukraine, has inflation issues and is maintaining an incredibly high interest rate of 18%. Meanwhile, China, the second largest economy in the world, has slowed dramatically. Growth there has dropped to levels not seen outside of a crisis. While Beijing is doing its best to maintain stability, there's no doubt that China presents a significant risk to global economic growth. Despite these challenges, the global south remains relatively insulated from the severe economic pressures faced by Europe and North America, for now. However, their fates are still closely tied to the economies they trade with. If Europe or the US falters, the effects will ripple through these economies too. Now we turn our eyes to North America, particularly the United States, which remains a key player in the global economic landscape. In the second quarter of this year, the US posted impressive growth, with its GDP rising by 3%. Inflation is coming down, and the Federal Reserve is cautiously optimistic. But there's a catch. Behind the scenes, the Fed is still tightening the money supply. Remember the quantitative easing during the COVID-19 pandemic? That stimulus inflated the Fed's balance sheet by around $7 trillion. Now, the Fed is reversing that, removing roughly $1.8 trillion from the financial system since mid-2022. It's a painful but necessary step to ensure long-term stability. However, there's growing concern that the Fed may have overcorrected. Wall Street is split, with many, including our own channel, believing that now might be the time to shift focus. Instead of continuing to fight inflation, perhaps the Fed should start loosening its grip and focus on preventing an economic slowdown that could mirror Europe's troubles. During the recent Jackson Hole Symposium, Federal Reserve Chairman Jerome Powell hinted that the Fed may consider cutting rates, but emphasized that this will depend on incoming economic data. As he put it, "The time has come for policy to adjust. The direction of travel is clear." But when exactly that will happen remains the big question. So what's the verdict? Are we heading into a global recession? If you look closely, 5 of the 13 major economies in our survey have already cut their interest rates, and Europe's central bank is poised to follow suit. Clearly, central banks worldwide are starting to recognize that the real risk now lies in slowing economic growth, not just inflation. The takeaway? We may not be in a full-blown recession yet, but the signs are there. The global economy is at a tipping point, and how quickly central banks, particularly the Fed, respond could determine whether we experience a soft landing or a much harder fall. So what can you do to prepare? First, stay informed. Knowledge is power, and in times of economic uncertainty, being ahead of the curve can make all the difference. Second, diversify your investments. In times like these, having a broad portfolio can help insulate you from potential downturns. And finally, keep an eye on interest rates. Changes in monetary policy will be your clearest signal of where things are heading next. Thanks for watching Wealthmaster. Be sure to hit that subscribe button, give this video a thumbs up, and share it with anyone who needs to understand what's happening in the global economy right now. Stay tuned for more insights on how you can protect your wealth and thrive in these uncertain times.